Hi, my name is Christian Rodriguez with Cross Country Mortgage.
I'm Cynthia Weiss. I'm with Century 21 Redwood Realty,
And this is Mortgage Meets
Main Street.
Yeah.
So Christian, I think a good way to start is talk about sort of the bird's eye view of how we work with first-time homebuyers. And I think people are surprised. The first thing they want to do is come to me as the agent and start looking at homes right away. And actually, the first thing I tell them to do is go to you and get that pre-approval.
Yeah.
And so talk to me about that process and how that works.
Yeah, unfortunately, the first part is the least sexy part. You know, it's fun looking at Redfin and Zillow and your dream home and wanting to go to an open house over the weekend, but it really all starts from financing and getting pre-approved. Now, when people come to me, especially first-time homebuyers, they have a lot of questions. We start off by taking a loan application and I walk them through it. I mean, everyone's main hesitation is, oh, if I get a loan application, they're going to pull my credit, you know, my credit scores are going to drop. But nowadays it's industry standard that we run a soft pull, and that just kind of gives us a better picture of where their credit scores are, their current liabilities, and if their income supports, you know, this new mortgage payment, right? And it's always best to get pre-approved as early as possible because you really want to understand the mortgage you're going to get yourself into and see if there's options out there for you, right? And that's where it comes into play when there's these programs like first-time homebuyers. We have Fannie Mae and Freddie Mac have Home Possible and Home Ready. We have VHDA in the area, and you know there's programs out there that assist you with down payment, grants, second liens, lots of options out there for you. And that's what we really try to get people to understand. And we can really only figure that out once we have the loan application and we thoroughly pre-approve you.
Right. And in this area, you know, it's a high income area. And I think people are sometimes surprised, like you mentioned the Home Ready, Home Possible programs, that you can actually be pretty high income earner and still qualify for a lot of these programs, which is really great. And also, I think it's helped to define what a first-time homebuyer actually is. So, like in Virginia, what does that mean? Like, how long doesn't mean it actually is your first time purchasing a home.
And that's a good question because different programs have different definitions for first-time homebuyers.
Right, exactly.
Like VHDA, Virginia Housing, you really have to be, this is your first home. You haven't owned a home in the last 3 years. Home Possible and Home Ready are a little bit more flexible in that you can have another home, another finance home, or another property owned free and clear. But you do have to meet their income limits. You know, they both have income limits.
Right.
Fannie Mae and Freddie Mac, for their Home Possible Home Ready, it has to be 80% of the average median income for the county. So it's very county dependent. So in Northern Virginia, it's a little bit higher than if you were, you know, looking in rural North Carolina.
Exactly. And that makes a big difference.
Yeah.
So, so then so my clients come to you, they get the pre-approval, and then explain the difference, because we also hear about pre-qualification, and there's obviously a huge difference. And I think it's important for buyers to understand what that difference is and why we prefer the pre-approval over the pre-qual.
Exactly. Yeah, I mean, those words get thrown around interchangeably, but they're very completely different. You know, pre-qualification, sometimes you can go online or just talk to a lender over the phone and just say, hey, these are my credit scores, this is how much I make, roughly what am I looking at, and they can kind of just give you a ballpark idea, you know?
Yeah, I think the idea is it's self-reported versus,
Now, as opposed to pre-approval, and that's really all I do is pre-approvals, is they do the application, we run the soft pull credit, and we thoroughly review income and assets, right? And as much as it's a little bit more tedious up front, it makes the mortgage process a lot smoother. You can go into it knowing there's not going to be anything that comes up, no surprises. The process between writing the contract and going to closing is a lot smoother. And you can take advantage of that, especially as a buyer agent, where if you're someone who's strongly pre-approved, you can be like, hey, let's try to close this in 2 to 3 weeks.
Right? Exactly. And that's great to be able to go to my clients and say, hey, you know, you're pre-approved through Christian now, through Cross Country. We know it's solid, and we can move forward with confidence, knowing he's. And also, I'd like to bring up, we talked about direct lenders versus broker, and I'd love to know the difference as well, because I know that I also work with buyers who don't really know the difference or don't understand the difference. So I think that's important to talk about as well.
So yeah, I mean, a mortgage broker is essentially trying to find the best product for you, the most cost effectively, right? The lowest interest rate, that's what they're trying to look for, right? So they can reach out to other lenders to see who has that rate. Now, essentially, they're a middleman, so they do get their own cut, right?
Right.
So it's not always
Yeah, you usually pay in points or something
Exactly.
to that effect.
So it's not always the most cost effective, as opposed to a mortgage banker, right? A lender who has their own products, where we are selling our products that we've, written guidelines for.
Right.
We have in-house underwriters and processors who know it thoroughly, and once those mortgages applications come in and they're underwritten, we are servicing those mortgages for the most part, right?
Right. You have a deeper understanding of how they work, what the underwriting qualifications are, and everything
There's no
else.
wonky overlay of something that could totally derail the loan, right?
And I'm not opposed to working with a broker. I've done many times, but I will say it's a little bit more scary on my end because you don't know what program they're going with. It could be, Rocket Mortgage or whatever. They have obviously a portfolio they tend to go towards, but you won't know until the last minute, and then you won't know what those underwriting qualifications are or restrictions are. So when you're dealing with, say, a VA loan, it could be a little dicey and a little more scary on my end, I feel like, because there's a lot more on the line, and if you're not getting that communication like I would be with you day to day, then I'm not sure where we are in the process as thoroughly. And so that's a little, I think, more encouraging to use a direct lender.
As a direct lender, there's a little bit more reassurance that the loan is going to go through, because we sort of have the flexibility of approving it ourselves, right?
Right.
So,
but that being said, I understand that people go to the direct, or not the direct, but they go to the broker in order to get the best possible rate they can in the market. And I get it. It's a hard market right now. We're in the sixes, and that's a hard reality that buyers are having to live with now. And I think they are, to a certain degree, coming to terms with that number now, and realizing that right now there isn't going to be much change in that. And like we talked about, this market changes so much, so quickly. And we even said, a couple months ago, before the war, rates were starting to dip, and they had dipped under 6%. So it's like, it's how quick you move and how quick you stay on top of that information that's really important, that you and I are working on together to make sure our clients are aware of what's happening in real time. So.
No, exactly, and it's hard to predict the market, right? We can see trends, we can kind of understand how things move at certain news outbreaks, right?
Right.
But again, it's very volatile, and sometimes geopolitical events can happen that can derail the momentum, right? So with uncertainties like inflation, oil prices, we can see a shift in the market, and it's really hard to see when they're going to get back on track, right?
Right.
So it is important to know, hey, look, this is where the market is now. It could shift, right? We want to pre-approve you based off what today's market looks like. But if you're a buyer, first-time home buyer, you're not looking to buy in a couple of months, and there's uncertainty of, if rates are going to continue to go up or down, that can impact people when they're looking to buy, right? It could, have them.
Well, how much they qualify for, essentially.
Exactly.
So how much they can come into the game with.
Exactly.
And so that's why it's so important to go to you first and get pre-vetted for that.
Yeah.
Walking out with more confidence with me, because it's not just get a pre-approval, it's also create the budget. And that's where I'm coming in. I'm setting the expectations of, you might be pre-approved for this amount, but is that really the budget you want to keep?
Exactly.
Is that, you could qualify at 600, but maybe 550 or 525 is really more in line with your budgetary expectations, especially when you start including things like mortgage insurance or homeowners insurance, taxes, everything else that affect your final payment. So you have to factor all of that in. I think that's something that buyers don't always look at. They look at that mortgage payment, but I don't think they sometimes look at the bigger picture of how it fits.
And that's what makes you a good buyer agent, and then we work together well, because I think we're both looking out for the best interest of the buyer. And everybody has different lifestyles, and everyone can manage their money and budgets a little bit differently, right? So as much as I like to tell them, hey, this is your max qualifying mortgage payment, not everybody's comfortable with that, right?
100%.
And that's just...
We don't want them to be house poor, right?
Exactly.
Yeah, we want them to be happy and no buyer's remorse. None, not allowed.
So we're really trying to get them to feel comfortable with the decision they're making. And sometimes that can come from finding out earlier as opposed to later, right?
Right.
As long as they're educated up front of what they're getting themselves into, they're less likely to back out of a contract or pull out just because of, some minor thing.
Cold
right?
feet
Cold
or,
feet, yeah.
well, I actually just recently had something where a listing that my buyer was interested in, and there was a contract on it and it pulled out, and it was because the buyer said they weren't fully aware of what their mortgage payment was going to be.
Yeah.
And that's why they backed out.
Yeah.
So it's like, that could have been a conversation that should have happened before any of that writing the contract up. That should have been something where I would have vetted and said, hey, let's talk about what you're comfortable with.
Yeah.
So.
And I think we're both great at being fully transparent so that they understand 100% what they're getting into and they're not blindsided. Especially as a first-time home buyer, you have a lot of questions up front. You really don't know about everything, and you're afraid to ask certain questions, and then next thing you know, something pops up that you weren't even aware of. Right. So I think we do a great job in educating them as much as possible, at least with the financing end, and then when they hand them over to you, you're great at taking care of them and finding them the exact house that they want.
Yep.
So do you want to go over a little bit of how you work as a buyer agent with your clients?
I can absolutely do that. So I like to sit down, meet with my clients after, of course, love to get their pre-approval first, so then I know what actual number we're working with. Because like we talked about, if you just get a pre-qualification online, then it's not really a real true number. It's a self-reported number, and I need that pre-approval number to know what we're working with. And then, is that their actual budget? Are they working below that? Is it the mortgage payment they're focused on? What are their long-term goals? Like, what is the purpose of the move? What is the goal here? Is this like a family property? We want to be here together a long time. We're looking to have our kids go to the school system here. Is this an investment property? Is this a property that, I have an older child, maybe I'm going to leave it to them and I'm going to move into a different property later on. I like to have those conversations early on because it matters as to the resaleability of it, as to how investors look at it. We need to look at it from different points of view to see where it all converges, what makes the most sense for you in that moment, what neighborhoods you're buying in, what sort of distinct characteristics you're looking for. And I like to say, what are not only what you want, but what are your deal breakers? If there's no fence and I have a dog and I have to have a fence, then okay, well, we know that's the line. Or smoking in the house, that sort of thing. I can definitively look at something and then know to reach out to the agent and ask those questions, and then I know that just take it off the list. And I think that's just important to know. I like to create a broader search in the beginning and say, hey, given what you've told me, if you don't have specific areas in mind, let's branch out more, and then let's look at those areas, and then let's really zone in on what specifically you're looking for. And then that's where my expertise comes in, because knowing the different neighborhoods in Virginia and Maryland gives me the advantage of saying, hey, how about this neighborhood, or how about this neighborhood? Maybe you haven't thought about this city or this particular zip code, or even recently I'm working with clients who I think are probably leaning more toward one level living. And so I said, how about a 55 plus community? Because they would qualify. And they had never even thought of that opportunity. And I said, yeah, there's some really great opportunities close to where you live that are within your price range. So it's something they had not even considered. So I think that's where I come in and help them and then over time we sort of narrow down. And then I also like to talk to them based on where they're looking at what the market looks like. Right now, I like to call it microclimates. It depends on where you're buying. I have clients right now, in Lake Ridge, and there's just a surplus of homes. There's just a lot of saturation, which is great for a buyer. More choice, more contingencies in the offer, which is fantastic. But in an area like Fairfax, I mean, homes were basically going under contract in less than 5 days, which is crazy. But if you're not prepared for that and you're not ready and you don't know sort of your top line, what situation under pressure, I never want anyone to make an emotional decision regarding a massive financial decision in their lives. So I want to prep them ahead of time and say, this is what we're going to be up against. I want you to be mentally prepared for if there's going to be an escalation involved or multiple bidding involved. Where are your hard limits? So that you feel comfortable, I feel comfortable, and we don't feel like we're pushing into that emotional territory where things can get out of hand, and also where that buyer's remorse tends to come in. So I want to make sure that's definitely not happening.
Especially with first-time homebuyers, I think they're a little indecisive at first of what kind of home they want, what kind of lifestyle they want, what kind of community they want to be in.
Right.
So it's great when you show them around, they kind of are able to narrow it down, like, okay, this is for sure what I want. And you do a great job finding them exactly what they want.
And sometimes it's just a feel. And I love to tell my clients too, I'm bound by fair housing laws, so there's certain questions you just can't ask me. But I can always, what I say is I'm the source of the source. So if you're questioning me about, crime in an area, I refer you to the local county crime statistics or go to the school system website, check it out, go to greatschools.org, any of those resources, but also go walk around the neighborhood. Go drive to it if you're worried about commute. Talk to the neighbors know everything. And there's always the one who knows all the dirt.
Knows too much.
Talk to them, because good and bad, you'll learn everything you need to know about the neighborhood. And it's the best way to learn. And honestly, I mean, and that person will end up being your resource in the future anyway. So
we want them to love that house, but also love the community that they're, moving
exactly, because that's a big part of it, is knowing who they're moving in with, and knowing like, hey, I have a dog, and I know there's a lot of dogs in the neighborhood, or I have a kid this age, and there's other kids in the neighborhood, or maybe they don't want any of that. Maybe they want to be in a 55 plus golf community and they don't want any kids, and that's okay too. But unless you really walk around and experience that house, then you're not gonna really understand what you're getting into, because the house is just, the inside, it's the community you're a part of.
You want to walk us through a little bit of what you do when you're submitting a contract with a listing agent?
Sure, I would love to do that. So, we talk about, obviously, the first thing I do is I reach out to the listing agent immediately. Creating that rapport, creating that good connection, communication is key, especially in a competitive environment, because reaching out early will help them remember me, remember my clients, and then I can, they're more apt to reach out to me if changes are happening. So they're getting more offers in, and they come back to me and they say, hey, I really want to work with Cynthia. She's like great to communicate with. She's very transparent. I mean, we know what she wants, and I feel like we can talk to her. She's kind of edging her clients towards working with me, because she's giving them this feedback that's very positive about me, and that reflects on my clients as well. So that's very helpful for them. And then I sit down and I'll say, hey, what are your clients looking for? I flat out ask the agent and see, what are they looking for? Do they want to rent back? What about inspections? How do they feel about this? Are they going to be offended? Because that's a real thing. If you put in a low ball offer and you didn't even talk to the agent about it, it can come off really bad and just hit flat, and the response is going to be really bad. But if you have a conversation beforehand about it and see what the expectations of the seller are, then maybe you could come in under list price and it's not going to be offensive in any way. So that's why that conversation is so important. So then I go back to my clients and I talk about what the seller's expectations are, and what are you willing to adapt to? What are you not willing to adapt to? What things do you feel you need to still demand on your part? every time I can get in a home inspection, I'm getting in a home inspection, 100%.
Yeah.
That being said, it doesn't always happen. I wish it did. In a competitive environment, you have to do sometimes what's called walk and talks. Not a fan, but they happen. What a walk and talk is you hire an inspector for about an hour. The cost is much lower. It's probably under about, $250 or so. And they only do a 1 hour walk through the house, and they're looking for major structural issues, leaks, that sort of thing. And then the reason you do that is because you want to be able to then write the offer without that home inspection contingency in it. Yeah. And you're doing that to write a stronger offer because there are already offers with no contingencies, or there are offers that have waived that home inspection contingency. So it's important to know what you're dealing with. And again, if I'm the only offer, then obviously I'm putting it in there to have that home inspection. But if I know I'm dealing with multiple offers and a home inspection is going to make or break this deal for the seller, then I'm going to have that conversation with my buyer. At the end of the day, I'm always going to do what my buyer advises me to do. So I give them the advice. They tell me what they want to do, how they want to structure it. I'm always going to do what they ask me to do at the end of the day. So I'm just here to give advice on what's happening on the ground so they have a full understanding of what they're walking into. Once you actually present that offer, and then if it's signed and agreed to, then we are called ratified. So ratification means both parties have signed, seller and buyer, and it's been delivered to all parties. So that is ratification. That is in the contract terms, day zero, we call it. And all terms in the contract are based on that day zero. So things like the earnest money deposit and the inspections and the finance contingency and the appraisal contingency are all based on that day zero. So that's important to know going forward what's involved with that. So.
Do you mind if I add on a little bit to that?
Please do.
Okay. So when we're working together with clients, and you're submitting the offer before it gets ratified, you give me a heads up and let me know you're submitting it that night or in the morning, and I reach out to the listing agent because a pre-approval letter only goes so far, right? And I love to give them a call just to alleviate some questions and concerns that they might have, that the sellers might have, without disclosing too much about our client, right? And the main thing is, and like you touched on this, is the financing, appraisal contingency, the home inspection. We really want those protections for our buyers, right? But we also want to make sure that they're competitive, especially in this market, to be able to submit an offer and be taken serious, right? And unfortunately, sometimes when it's that competitive, to be on the top, we have to waive those things. And we are going to have clients where waiving the financing and appraisal just isn't an option. But me and you discuss this prior to submitting, ahead of time with the clients, with you prior to submitting the offer, just so, hey, you are in a position where you could waive appraisal, you could waive financing, and we really want to make sure that they know what that means.
Exactly.
And when they're submitting the offer, they're comfortable with doing so, right? And it could be that they submit the offer with the contingencies in place, and then the sellers come back or the listing agent come back and say, hey, we'll move forward if you can waive them, right?
Right.
And at that point, we might discuss a little bit more. But we just want them to go into it as educated as possible.
On their choices.
You don't want them to have the emotional aspect of it, right?
Exactly. Yeah, that's what causes the buyer's remorse, I feel like, is that going into it, this bid, and outbid each other, and if you didn't have that conversation early on, when you weren't thrust in the middle of this competitive environment, you go beyond what your goals and your budget are when you don't have that conversation to begin with.
Yeah.
So it's important to set up the expectations that way, which I feel like we both do really well. And when we talk to each other about it. And I'd love you to go into more detail about waiving the financial contingency and what that really implies, because I know a lot of agents do it for their clients. I don't think buyers truly understand the full implication of what that means to do.
So essentially the financing contingency is in place to protect the buyer if for some reason the mortgage does not go through, if we're unable to approve them, right?
Right.
And sometimes people go, oh, if you're pre-approving them, why wouldn't it go through? But there are situations where, hey, this borrower just lost their job, halfway through, and we experience that a lot.
Or someone passed away.
I mean, there are things that can pop up, right? So even if someone's well pre-approved, things can come up, and financing is a way of protecting you, right? I mean, just a couple years ago, even up to this year, there was a lot of people who were being laid off or losing their jobs. And that can be scary, especially when you're under contract and now all of a sudden your company's saying, oh, there's layoffs, or you work for the federal government and there's, they really want those protections in place for the buyer. But again, if you feel like you're strongly qualified and nothing's going to go wrong, sometimes waiving that financing can help, right? The appraisal contingency is a little bit different in that you're going to move forward with the transaction even if the appraisal appraises low, right? So if you're buying a home for $600 and the appraisal comes in at $570, right? Is that going to impact your qualifications? And sometimes it does. I mean, because we're basing the loan off of the lower of the sales price or the appraised value. So sometimes now your loan is based off the 570, but you need to come up with the difference because the home is still going to be $600,000.
And if you don't have that appraisal contingency, then you have to bring that in cash, the difference to settlement.
Exactly.
And that's a lot.
Yeah, it's a lot. And
it's a lot of money.
And I mean, there are people in this area who can cover the difference, and they're okay with covering the difference because, hey, I'm buying in this market. In a year, it'll appreciate. I'm not really concerned about the value, right?
And there's also a part of the contract, it's called appraisal gap, where we can just say gap. So I'm willing to pay up to this much in the gap. So if it were 570 and if I didn't say I was going to do up to 30,000 in the gap, I was only going to do 10 or 20, then in that case, you have that in place to help protect you. And then, then you can back out based on that contingency if you have a gap in place. But if you've waived the appraisal, I mean, you basically have to go to the table. There's no exception to that. And you're going to have a very hard time getting out of that contract otherwise.
And there are some people like, this is the house I want it no matter what.
Right.
And they're very motivated that they go, okay, waiving these things isn't an issue for me.
Right.
But we want to make sure that they know what they're doing before they act on it.
And sometimes the questions you'll get is, do these clients, do they have enough cash to bridge that appraisal gap if there's an issue? Do they have enough cash in the bank to buy this house without the financial appraisal? Financial contingency. So that's important to have those questions asked as well. And I'm sure you're getting asked those questions.
Yeah, I think that's a listing agent's favorite question to ask.
Yes.
The appraisal comes in low. But I also like to ask them, pose the question, hey, do you think there's any concerns with the home appraising low, right? Sometimes they do and sometimes they don't.
Right.
And that's when I like to follow up. Well, in the case, if you do have concerns that the appraisal is going to come in low, I've already, shown scenarios to my buyers.
Yeah.
What would happen if it does come in low? And they're in a position where it can come in low and it's not going to affect their qualifications, right?
Right.
And then we all just cross our fingers the appraiser appraises it.
Right. I mean, sometimes it depends on the appraiser and the area. You just never know what's going to happen.
Yeah, especially in the spring market. I think in the spring market, especially early on, you could start to see low appraisal just because the comps aren't there.
Right.
And then towards the end of spring, early summer,
you have a lot more,
there's more
home selling to show the background of this is what it's actually solidly selling at.
Exactly. Yeah. Or maybe just buying in a community where there's really not that many comps out there.
Right.
It's a little bit.
Well, there's certain neighborhoods where it's just as soon as it's on the market, it's gone.
Exactly.
Just because of location, as I said, there are certain hot spots that I'm going to know that.
Do you want to go over a little bit about how the Northern Virginia market differs from the national market?
I can absolutely do that. So I like to talk about, people come to me and they say to me, what's the market like? And I smile because, I know they're getting their information from the national news, and those are national numbers, and they don't apply to this area. I call it the bubble. We live in a very unique area. We live in a high income, high government, contractor, defense, biotech area. And so most people are employed, there's very low unemployment rate, and are very high income earners. So it's very different than the rest of the country, which tends to be, more rural and less bigger cities. So you have to be able to look at it as a microscope. And I mentioned earlier microclimates. It is the same way, even within that bubble of the DMV, there are microclimates within that bubble and so being on top of the data, which I am always doing, is what's important to keep an eye on. So if you're telling me, well, how's the market? Then I'm going to say, well, what do you mean? Northern Virginia or Maryland or Montgomery County or Prince William, or where are you specific, or a specific neighborhood or a specific school system? Like I can tell you right now, Fairfax County just went through a huge change where they just redistricted all of the school systems and they got rid of islands. So if you wanted to buy in Fairfax County, I would have to tell you, you need to do more research on the school systems, because if that's important to you, then you need to make sure that these houses are located in the school district that you still want your kids to attend. So that's an important detail that I have to keep on. I'm very hyper local, keeping in touch with the news, what's happening on the ground. I'm also very involved in the NVAR and GCAR, so I know, all the news coming in, how it affects people moving into the area. New legislation that's being passed. It's all important to be able to convey to my clients how this affects them in the long run. So,
it's a very highly attractive area.
Yes.
And there's a lot of secure jobs, great school systems, which also leads to people not wanting to leave the area.
Yes.
Which is an inventory problem. And
yes.
like you touched on a little bit about the difference of Fairfax and like Lake Ridge, Occoquan,
right.
where the inventory, in Fairfax is a lot lower, and that's why we have to kind of adjust our approach when we're making an offer in those kinds of neighborhoods as opposed to
and it's funny to say, I'm like on the pulse. Like I said, I had a listing in Fairfax a couple weeks ago. We went under contract within 3 days. We do what's called a Monday mastermind in my brokerage. We all get together on Zoom and we talk about what's happening on the ground. What did you deal with this past week with open houses, listings, showings, buyers, anything? And the funny thing is, someone came out and they were like, well, Fairfax is now taking 5 to 7 days to go under contract. And we're kind of laughing because, well, that's a lot longer than the 2 or 3 days it was taking previously. But, again, it made a difference. It's a little bit longer, so we have to be able to go to our clients and say, okay, this is now the new expectation. It's a couple weeks later, and it feels like, the comment was, it feels like the spring market is actually contracting a little earlier than it usually is. We tend to go into about late May when graduations start, and then after that most people are going on vacation and they have their summer plans, so it's just not as many people looking to buy a house. So when we're talking about selling, now is when most people are selling because it's the best opportunity, the most pool of buyers, most people who want to buy your house. So
that's great. Thanks for sharing.
Yeah. And then, of course, when you sell, we're talking about first-time home buyers, but when you buy or when you sell, that's dependent on your timing. I can say there's an ideal time to buy or sell, but at the end of the day, I'm going to create a strategy for my clients based on when they need to do it. Their timeline, their budget, all the other things we talked about, the neighborhoods, whatnot. So I want to be able to sit down with every client and say, okay, well, if we can't do it in this time frame, which we consider the ideal time frame, how can we strategize ahead of time to make this the best for you, even if it isn't the most ideal timeline based on the DMV? So.
And sometimes, and like we touched on, this area is very, attractive, and people don't want to let go of their homes because,
Right.
if they bought in like at 3% a starter home and now they've upgraded to something bigger, it just makes more sense to have it as a rental. The margins are there.
Yeah.
So I think the inventory on
yeah.
starter homes is very low
Yes.
in this area. So it is hard when you are a first-time home buyer and that's what you're aiming for is a starter home, that it might be a little bit more competitive on that kind of home as opposed
Because
to,
there aren't as many available,
Yeah.
and it's much harder to get in. And what we're seeing, and actually Realtor.com just came out with an article about multi-generational living, and what we're seeing is a lot more younger couples moving in with their parent, or the parent providing a significant amount of money for a down payment in order to help their children get their foot in the door to equity, because they know once they get that house, that the equity, as we talk about, we're like, don't wait.
Exactly.
Because the equity continues to go up.
Yeah.
It's not the same as it was with a financial crisis, with the bad loans and the mortgage-backed securities. It's not like that. Homes continue to rise in value.
Yeah.
In the DMV, like without any question, assuming you're keeping it, maintaining it, and updating it as necessary.
As much as people like to complain about the cumbersome process of the mortgage, process, there's reasons for it now, though. There's guidelines, there's systems in place to make sure something like the financial crisis doesn't happen again.
Exactly.
Right? And
We
that's
don't
what
want it to.
Exactly. We want strongly qualified people who can make these mortgage payments for the entirety of the mortgage.
Right.
As long
No
as they
balloon
own the property.
payments, no interest-only loans,
So,
no
and I
negative
think that
AM.
makes it a more secure market. You're not going to see housing bubbles or collapses.
Right.
But again, I mean, that stems from us experiencing that back in 2008, right?
Right.
And even then, though, if you look at the Northern Virginia market, then how quickly it recovered compared to the rest of the country.
It really did. Yeah.
And like you said, it's just very strong employment rate, high-paying jobs, and it's great that we're fortunate enough to live in these counties,
Yes.
right? And there's a lot of people who are fortunate enough to be able to gift their children down payment, but if that's not an option for you, there's programs out there, that can help you.
Talk to Christian.
Yeah. So we really want to make sure that home buying is something for everybody, not just a select few.
It should not be exclusive to a small group of people.
Yeah, because I mean, that's the biggest way of generating, generational wealth.
Exactly.
It starts from buying a home.
Exactly.
And not wasting your money on rent.
Right.
Right. But again, we want to make sure that it's for you. Not everyone is ready to be a home buyer. It might not make sense for you. But if it is, I definitely take advantage of it.
I think, and you tell me your experience. My experience is people are surprised that they can come into the market where they can based on their income level. They tend to be surprised.
Yeah. I think it's two-sided. There's ones who are surprised that they can buy a home at all.
Yes.
And then there are some that are surprised, why can't I buy this $10 million home?
Right.
So I think it's setting expectations for people, right?
Exactly.
And but yeah, exactly. We want to make sure that it's for everybody, right? But at the same time, having them prepared and be in a situation where they feel like that's something they're ready for.
Right.
Right. And not everyone's ready for it.
Right.
But our goal
And I
is
know
to get
that
them
you
there.
and I both work with people to make sure if they aren't there, say credit, their credit isn't high enough, that you have a free credit program where you can help people raise it over time in a short, 3 months or even 6 months to a year, and get them in position. And then I can be talking to them about strategy. Where are we going to be? What's the down payment going to be? Where can we get some grant funds or that sort of thing? What programs will you qualify for?
Yeah,
to
time
help
is on
get
our
them
side.
there.
Yeah, that's why we
exactly.
like to do all this stuff up front, because it could be that, hey, we not only just qualify, but maybe just a better rate, better mortgage insurance, if we get your scores up to this, but it might take some time. And sometimes it's fairly quickly, pay off a couple things, and then in a couple days we can get your scores up.
Right.
And then there's people who are in other situations where it's like, hey, I'm not looking to buy till end of the year.
Yeah.
And it's like, all right, great, we have time to improve your scores, and we don't need to
Exactly.
dump a lot of money right now. You can start just making some smaller payments here and there, bringing some balances down, And then that kind of just lets them be in a better position for when it is time, when they are ready in
Yeah.
the end of the
Yeah.
year to make something
We're here to
happen,
help you,
right?
the whole way.
Now, I'm glad we talked a little bit about the Northern Virginia
Yeah.
bubble that we're in, just because it does differ a lot from the rest of the country.
Absolutely.
So, yeah. Do you want to go over a couple myths that people might have?
I think that would be a great idea.
Okay.
Yeah.
All right, let's see. I think the first one is about 20% down.
Right.
There's a whole idea of like, oh, to buy a home, you need to have 20% down. And I think that's the
Exactly.
biggest myth people have, not realizing that, first-time home buyer programs allow you to have about like 3%, FHA 3.5%, VA you can do 100% financing.
Yep.
So there's still a lot of options out there. I think when people hear, oh, I need to have 20%, they wait and they're like, oh, I need to, save
Yeah,
up.
it's a lot of money.
Right.
I mean, think about it, $1 million home.
Exactly.
Yeah.
So I think nowadays, though, I do like to tell people that if you are putting less than 20% down, mortgage insurance is involved. And then we just
Right.
kind of go over a little bit about mortgage insurance.
Again, that hidden cost to
Yeah,
homeownership
exactly.
that
There is an
you
additional
haven't
cost.
calculated.
Yeah.
Yep.
But what's nice about conventional mortgage insurance is once you start to build enough equity in your home, that payment comes off, right?
Yes.
But what I do like to tell people is, because they come to me and ask me, hey, how do you guys qualify a borrower, right? And I tell them, usually ballpark for conventional financing at least, it's about like 50% debt to income ratio.
Yes.
But if you're putting less than 20% down, I also like to let them know, hey, after you reach a certain debt to income ratio, about like over 45, the mortgage insurance starts to get a little higher.
Right.
And that can impact people's qualifying. So although yes, we can go up to about 50%, sometimes for a first-time home buyer who's not putting a lot down and wants to keep their payment lower, we try to keep it a little bit lower just so that, hey, yes, you might be looking at a lower sales price, but you're more comfortable with that mortgage payment, right?
Exactly.
So that's kind of where the myth comes in. It's like, hey, I need 20%. But again, there's lots of programs out there, like
And
Home
there's
Possible,
grants,
Home
yeah.
Ready, that offer discounted mortgage insurance.
Yes.
You can do lender-paid mortgage insurance where it gets built into the rate. You can, we Cross Country has a specific program where you can do no mortgage insurance at 50% down as long as your credit scores are over 760.
Yeah.
So I mean,
which is
there's
fantastic.
a lot of flexibility there, right? So we want to make sure that, hey, I don't have too much saved up to buy a home, but at least let me see what I can buy, right?
And explain to me what the mortgage insurance is for, so people understand, especially new first-time home buyers.
Essentially, it's just a protection to the lender. Obviously, there's more risk when someone's putting a lot less down, so it just alleviates that risk, right? It's a cost to the borrower, and it's, again, something that can come off once you start to build equity in it.
Right.
But it is a payment that
With conventional.
with conventional,
Yes.
yeah. FHA, it's through the life of the loan.
Yes.
And
Unless
VA,
you refinance.
unless you refinance, and then VA, there's no mortgage insurance, right?
Right.
So up to 100%, there's no mortgage insurance. But yeah, essentially it's just a protection to the lender for taking the more risk.
Exactly.
And that's really what all it is. But again, we like to be transparent and let you know what that payment's going to look like, right? And it might make sense to pay it up front, to pay it monthly, but at the end of the day, we want to make sure I send you enough scenarios so you can compare the two and see what makes the most sense, right?
Right. Makes complete sense. So I think another myth that we hear a lot is about credit score, in that it has to be perfect. So do you want to talk more about that?
Yeah, I mean, a lot of people think they need to have the perfect credit score to purchase a home, right? And sometimes they don't really know the credit scores that they have. Sometimes like, oh, I'm working, I have like, Credit Karma, or, my credit card tells me. And when we do a mortgage pool, it's a little different. We have all different algorithms. You're going to have a different algorithm when it comes to buying a car, getting a credit card, and a house, right? And so sometimes people can be surprised by their credit scores when we pull it, because it's not in line with what they think it is, right? Not too far off, but it's not exactly what they thought it was going to be. And what I'd like to let them know is where their scores are and if their scores can be improved. And sometimes it makes sense to improve people's scores, and sometimes it doesn't, right? So what we like to do is, when I do the soft pull, I send them a copy of their credit report and be like, hey, here are your current financing options. If we were to improve your scores, we could look at a better interest rate, we could look at a better mortgage insurance to bring your payment down, and sometimes it makes sense, right? sometimes people are in a position where their credit scores aren't going to improve very quickly. It's going to take some time. So in those situations, we go, hey, because of your credit scores, it might make sense to do FHA as opposed to conventional, right? Because conventional interest rates, mortgage insurance can fluctuate a little bit depending on your credit scores. What's great about first-time homebuyer programs like Home Possible and Home Ready is that they offer affordable mortgage insurance, and their rates also aren't impacted as much with the difference in credit scores. So someone who's 700 as opposed to 780, the rate in mortgage insurance is going to fluctuate too much as opposed to like a traditional non-first-time home buyer going with conventional finance. Okay.
Right.
So what we really want to do is make sure that it makes sense for them, because we obviously want our buyers to have as much money as they can to put down so that they can afford the home that they want, as opposed to using that money to improve their scores. Right. So sometimes it doesn't make sense for people to spend a lot of money to improve their scores in a quick amount of time.
Yeah.
So we just move forward with where their scores are currently.
And this is something you offer free.
Yes, it's free part of the free consultation we do. There's a lot of services out there that people have to pay to get their credit improved.
Yeah.
But this is more, we're trying to look out for you, and if it makes sense to improve your scores, we'll do it. And so we run scenarios. It's an AI technology that just runs different scenarios and what makes the most sense, what's the most cost effective. And we can see, hey, they're not looking to buy for a year. So what's a plan to improve their scores within the span of a couple months as opposed to a couple weeks can be cheaper than trying to fix their scores by tomorrow.
Right. Makes sense.
So if we really want to cater it to what makes sense for you, and if you're looking to buy down the road, or if it doesn't really make sense to improve your scores right now because the change in rate and mortgage insurance is very minimal compared to what it is to improve your scores, that's what we want to do, right?
Yeah.
So I like to let people know, hey, let's see where your scores are now and see what our options are currently and what our options are if we did, this and that. So that's really what I want to let people know. That don't be afraid that you feel like your scores are too low. Right. Because we can work with you to improve them.
It's a conversation.
Yeah. And you'd be surprised the options out there for you with low scores, right? And we just want to make sure that they go into it and they have more confidence and they're not afraid, I have bad scores. I
think there is a lot of that too. Yeah. There's, embarrassed to say where you are, but we can, if you're willing to help them fix it and get them through the...
We can't help you unless we know, right?
Right, so, exactly. We're willing to help, and we're here for the journey. So, that's important. So.
So I'm sure you run into a lot of buyers who are kind of waiting for rates to drop or, waiting for the market to improve. What would you say to those people?
Well, we have a phrase in our industry, and you've heard it before. It's date the rate, right? Marry the house, marry the home. And the reason we say that is because we talked about before, we don't have a crystal ball. We can't tell what's going to happen with interest rates. A couple months ago, they were much lower. Now they're not. So we don't know what's going to happen in the future. And also, as we see continued positive equity in the area, holding back and waiting that year is actually costing you money. And we've calculated it. We've literally calculated waiting that extra year and buying at a, say 1% less interest rate. It just doesn't make sense. You're actually losing out. You're losing out on the game. And more often than not, a buyer who waits a year comes back out and says, I can't believe how much more homes cost this year versus last year. And I said, that's the nature of the game. That's why you want to buy, is to start that equity game early as possible. So, so what we typically tell them is don't wait, but there are ways to navigate around it. We know there's, float down, and then there's also the ability to buy down the rate, if that's something they want to do. So, and what advice do you have for your clients in that situation too?
Well, like you said, I feel like more often than not, more people come to me feeling that they missed an opportunity to buy, right? Where they're waiting for rates to drop, waiting for housing prices to drop. And like you said, this area, we're not going to see a giant dip in sales price, right?
No.
And when rates do start to drop, that's when a flood of new buyers come in. Everyone who was on the fence about buying now wants to buy.
Right.
And
it could just be like a 0.25% drop, and then all of a sudden, wham, so many more people.
And that's when you're going to be overpaying for a home, because that's everyone's going to, you're going to have like multiple offers, 20, 30 offers on a home.
A lot more competition.
Right? And that's where people go, okay, maybe I should start to buy, even if the rates isn't exactly where I'm at, because if the current rate stands, you qualify, right? And you can still feel comfortable with that mortgage payment.
Right.
When rates do dip, you can take advantage of refinancing. Right.
And I always say, talk to you first, because there's a cost to refinancing.
Exactly. You're resetting your mortgage, you're paying closing costs. It's not always, okay, let me look how much what's my monthly savings.
Yeah, a lot of people tend to zero in on the mortgage payment and how much they're saving a month. But if you're losing equity and you're paying closing costs, and you calculate that over the long run, a lot of times you're not winning out.
It needs to make financial sense.
Right.
Like someone who has a $200,000 loan and the rates drop to 1% isn't impacted as much as someone who has a $2 million loan.
Right.
When rates drop from 7 to 6, right?
Exactly.
So you really want to see what the cost savings is like, and how much, is it really going to make up the break-even point? Because that's what you really want to know. Is it make financial sense for me to pay these closing costs, to reset my mortgage? Is that monthly savings worth it? And that's what we really want to know. And that's where we work with our clients to be like, hey, yes, you're purchasing this home. Hopefully you have a great experience, so that when it is time to refinance, you come back to me and I can give you the proper guidance. And
and it's just a phone call. It doesn't cost them anything.
Exactly.
Just call Christian and say, hey, I've noticed the rates have dropped.
Well, that about wraps up our first episode of Mortgage Meets
Main Street.
And we went over a little bit about first-time home buyers, some myths, some questions people might have for us, this market.
We are a resource, and I'm Cynthia Weiss with Century 21 Redwood Realty.
Christian Rodriguez with Cross Country Mortgage.
So please always reach out if you have questions, and we will be covering more in our next episode.
All right, thanks again.